It's Ronnie, licensed real estate agent, and I'm back for another down payment assistance video. And today we're talking about Homes by CFE. Homes by CFE is a down payment assistance program that is marketed and targeted to people that consider themselves Black, African American, or Latinx. Now in this video, I'm going to talk about how the program works, the process, and the qualification. Now, the way Homes by CFE works is it is considered a second trust mortgage. In the case of this down payment assistance, it will be an additional lien against the property. This down payment assistance has to be paid back with interest. And how they calculate the interest is as follows. They subtract 2% from your first mortgage. Let's just say, for example, your mortgage is 5%. So this particular down payment assistance will have a 3% interest rate. Now, this down payment assistance is deferred for 5 years. So for the first 5 years, you do not have to make a payment on this down payment assistance. You will just have your first mortgage. But after 5 years, you will start having to make an additional payment on this particular down payment assistance to pay it back. Now, this down payment assistance is financed for 25 years. So once you reach 25 years in payments, the down payment assistance leaves, or once you sell or refinance the property, the down payment assistance portion has to be paid back. Now, here's one thing that I do not like about this program. Although you do not have to make payments for the first 5 years, that interest is deferred. So at the end of your mortgage, or when you sell the property or refinance, you have something called a balloon payment, where you have to make a large sum payment of the interest that was accumulated for the first 5 years of you having that deferred mortgage payment or that second mortgage payment on this down payment assistance. Now, here's one of the pros with this program. This program only bundles with conventional mortgages. So that means that you do not have PMI. PMI stands for private mortgage insurance. Private mortgage insurance is mostly attached to FHA loans, which it is insurance that protects the actual money in case of default. But because it is not a FHA and it is a conventional loan, you do not have that insurance attached to your monthly mortgage payment, something that will make your monthly mortgage payment a lot cheaper than if you had an FHA mortgage. Now, here's how the process works. Obviously, you should be pre-approved with a lender of your choice, whether it's your bank or a private lender that you know within your community. Once you're pre-qualified and pre-approved, your lender has to fill out a referral form to Homes by CFE. And once they check you out, check your file out and make sure that you qualify, which I will get to the qualifications later in this video, they then will reach out to you for you to fill out a formal application with them. And you also have to have a home ownership orientation into the program. Now, a pro with this program is that they can issue the funds within 3 days. Now, anybody out there that's familiar with, for example, the Maryland Mortgage Program or any of these other down payment assistance programs, they can take sometimes 25 to 30 to 45 days to actually issue you the money for you to close. And just to be clear, this money does not actually come to you in your pocket. 9 times out of 10 is sent to the title company or to the lender that carries the first mortgage so that these funds can be dispersed accordingly. This program provides up to 20% down in down payment assistance. Because this is a conventional mortgage, there are 3 different types of conventional mortgages. There's 3% down, there's 10% down, and there's 20% down. Now, 3% down requires a higher credit score, and using that 3% down is less than what you have to pay back. Now, once you get into the 10% down conventional and 20% down conventional, those programs are a lot more relaxed as far as the required credit score, because the way these banks look at it is if you have more money to put down, then they'll fall back or be more relaxed on some of the qualifications and when it comes to credit score and debt to income ratio. If you are at, meaning 100% or below of the median family income, you can get an additional $10,000 that are only for closing costs. If you're new out there and you don't know anything about the buying process, buyers are responsible for 2 things, the down payment and the closing costs. So if you're at 100% of the median family income, you can get an additional $10,000 to cover your closing costs, which makes you as a buyer more attractive because you do not have to ask the seller to pay your closing costs. Now, on to the eligibility and requirements of this program. Now, this program was created to expand home ownership opportunities for African Americans, Black and Hispanic, and Latinx communities. Borrowers must identify as African American, Black, Hispanic, or Latinx to qualify. Now, the locations, they allow District of Columbia, Prince George's, Charles, Baltimore City, and Baltimore County. The eligible properties are single-family homes, condos, co-ops, and multifamilies are not eligible under this program. The purchase price cannot exceed $650,000. Now for the income limits. I will put these up on the screen for you to check out and take a screenshot of. Now, borrowers must be a first-time homeowner. Homes by CFE qualify someone as a first-time homeowner based on the following. Individuals with no ownership and principal residence during the 3-year period ending on the date of the purchase of the property. This may also include a spouse, so if either meets the above test, they are considered first-time homebuyers. Single parents who have only owned a home with a former spouse while married. Individuals who are displaced homemakers and have only owned with a spouse. Individuals who have only owned a principal residence not permanently affixed to a permanent foundation in accordance with applicable regulations. Individuals who have only owned a property that was not in compliance with state, local, or model building codes and which cannot be brought into compliance for less than the cost of constructing a permanent structure. Now, here's where the program gets a little sketchy as far as cash reserves. One thing they do not like is you having cash reserves over 6 months. This is how they define it. After the loan closes, the borrower may not have more than 6 months of cash reserves. Cash reserves are defined as the total of all mortgage payments, including homes by CFE assistance, plus taxes and insurance. This does not include 401ks. Buyers must participate in home buying counseling, and they have to provide a certificate from Homes by CFE. Now, the maximum amount of money that you can get from this down payment assistance is capped at $100,000. Now, you as the borrower cannot have had any charge-offs or any delinquencies on your credit in the last 6 months. I know that this program seems like it has a lot of moving parts, and most of them do, but a lot of the moving parts are on our end as the agent or the end of the lender. But I think that you should know moving into this so that you can make a better informed decision for yourself and for your family moving forward. Now, as I said before, and I say in every video, a lot of these programs aren't my favorite, especially the ones where you have to pay the money back. However, depending on your situation, this may work for you, and that is the reason why I'm bringing the program to you. I'm interested in hearing what you all think down in the comment section, and feel free to reach out to me if you ever need help with anything. Again, I'm Ronnie, and I'm a licensed real estate agent in DC, Maryland, Virginia, and Pennsylvania. I look forward to hearing from you. Thanks for watching.